Every cycle, the crypto crowd loves its debates. Bitcoin versus Ethereum, Solana versus Cardano, memecoins versus serious chains. But in 2025, one of the debates heating up is Hedera HBAR versus Stellar Lumens XLM. Now, some people want to push the conversation way out to 2030 or even 2035, but honestly, if you're listening to this right now, you probably care more about the next 12 to 24 months. The opportunities are right in front of us. With Bitcoins having fresh in the rearview and liquidity cycling back into altcoins, this isn't the time to sleep on these powerhouse projects. So, what we're doing here is breaking it all down in a simple, conversational, no-nonsense way. Forget the jargon for a moment. Forget the hype headlines. The real question is, if you had to pick between HBAR and XLM today, which one gives you the better upside? Which one is positioned not just to survive the cycle, but to absolutely dominate it? Let's size them up. Numbers first, because that's what most people care about when deciding if a coin is cheap or too big already. HBAR, Hedera Hashgraph market cap currently sits in the multi-billion range, around $10 billion as of early 2025, with price hovering in the 0.20 cents, 0.25 cents zone. XLM, Stellar Lumens, a bigger player in the ring, also in the several billion-dollar cap range, mid-single-digit billions, trading around 0.12 cents, 0.15 cents. That means Stellar is carrying a somewhat larger valuation than Hedera. And that matters because when you're chasing returns, smaller caps often have more room to run, at least in theory. But here's the thing. In crypto, cheap doesn't always mean small, and small doesn't always mean better. Projects like Cardano and Solana were once written off as too big already. Yet Cardano hit nearly $100 billion in the last bull run, and Solana grew into one of the most talked-about ecosystems. So don't get stuck on surface-level numbers. Both HBAR and XLM are still sitting at what can only be described as post-bear market clearance prices. Instead of staring at today's price, zoom out and measure from the lows. HBAR rallied off its bottom when Bitcoin found a floor around $16,500. But even today, it's still within striking distance of those lows compared to its all-time highs. XLM also rebounded strongly from its cycle bottom, though it remains well below the peaks it hit in past bull runs. In other words, both are still relatively close to the basement compared to the potential skyscraper highs ahead. If you've been waiting for the perfect entry, spoiler alert, you're basically still in it. Back in 2020, Cardano's market cap floated between $1.6 billion and $3.8 billion, eerily similar to where HBAR and XLM sit today. And then, boom! ADA ran to a peak near $95 billion by the top of 2021's bull run. That was a 59x move from its lows. Even from mid-range entries, people still pulled 20x plus returns. If history rhymes, and crypto history usually does, both HBAR and XLM have room to absolutely blow past where they are now. The only question is which one gives you the bigger bang for your buck. For HBAR, if it followed a Cardano-style trajectory, you could be looking at anywhere from 20x to 50x potential at its peak. For XLM, the upside is likely more modest given its larger size, closer to 10x to 20x in a strong cycle. These aren't guarantees, but they're not pulled from thin air either. They're based on historical precedent from past altcoin breakouts. Crypto isn't just math. Narratives drive money. Narratives make markets move. XLM, its story is payments. Fast, cheap, global transactions. It's partnered with MoneyGram, it's ISO 20022 aligned, and it's been positioning itself as rails for the next-gen financial system. That's not hype, it's adoption. HBAR, its story is infrastructure, a public layer one with a unique consensus model that isn't typical blockchain. It's powering tokenization, gaming, and enterprise-grade use cases. Its governing council includes names like Google, IBM, and Boeing. If you're rating them, Stellar is the proven survivor with real payments adoption. Hedera is the potential breakout platform with heavyweight corporate backing. And in crypto, platform stories tend to attract more speculative mania because they feel limitless. Payments are powerful, but platforms can be anything. Both coins line up well for 2025 to 2026. the phase when altcoins usually run after Bitcoin sets the tone. HBAR is your moonshot bag. Smaller cap, underappreciated narrative, and delayed breakout potential. Higher risk, higher reward. XLM is your anchor. Reliable, proven, still standing after a decade. Lower ceiling but much higher certainty. The smartest play? Hold both. One gives you exposure to explosive upside, the other gives you survivability. Because in crypto, diversification isn't about holding 50 coins, it's about holding a few that will still matter in 2030. ISO 20022 adoption is accelerating globally, putting XLM right in the sweet spot. Enterprise blockchain use cases are finally leaving the white paper stage, and HBAR is quietly racking up throughput like few others. Retail hasn't fully woken up yet. The everyone's getting rich phase hasn't started. Which means, you're early. This isn't 2030 analysis. This isn't distant dreaming. This is the setup for 2025 and 2026, when altcoins typically go parabolic after Bitcoin sets the tone. The question isn't, are they good buys? The question is, which one lines up with your personal goals? If you want the raw numbers, HBAR looks like the heavier hitter. If you want the safer, adoption-backed play, XLM might edge it out. Let's be real. When you stack up Hedera HBAR against Stellar XLM, you're not just comparing two tickers on CoinMarketCap. You're looking at two very different stories, two different vibes, two different ways of approaching what blockchain is supposed to be. And if you're trying to figure out which of these has the better long-term upside as we push through 2025 and start eyeing 2030, you've got to go deeper than just staring at the charts. You've got to look at the multipliers, the adoption cycles, the risk-reward profile, and even the psychology of the communities around them. So let's break it down. We've put HBAR and XLM through the ringer. We've pulled apart their narratives, their multipliers, their cycles, their risks, and their best-case scenarios. Now it's time to zoom all the way out and ask the question every investor really cares about. What do these two look like in 2030? Because here's the thing, 2025 is not the finish line. It's the midpoint in a decade-long transition where crypto is slowly, stubbornly embedding itself into the real economy. We're in the awkward teenage years of blockchain adoption. Some projects will fade, some will stagnate, and a few will evolve into household names. The question is, does HBAR or XLM have the stamina to last that long? Let's start with Hedera. Right now, in 2025, it's still kind of a paradox. On one hand, it's backed by some of the biggest corporate names on Earth. Google, IBM, Boeing, these aren't fly-by-night crypto startups. That kind of boardroom firepower gives Hedera a level of credibility most chains would kill for. On the other hand, the price action just hasn't lived up to the hype. HBAR has spent most of the last 4 years in the undervalued gem bucket, waiting for its breakout. So what could make that breakout finally happen before 2030? Retail rediscovery. At some point, the wider market has to notice that HBAR isn't just another altcoin. If TikTok traders and YouTube hype channels suddenly decide Hedera is the next big layer one, then all that suppressed potential gets unlocked. Remember, crypto doesn't move on adoption alone, it moves on perception. If the perception shifts, HBAR could explode. The utility catalyst. Hedera's tech is genuinely impressive. Its hashgraph system is fast, secure, and eco-friendly. If that starts powering more mainstream apps like micropayments, gaming, or supply chain platforms, suddenly HBAR isn't just a speculative token, it's fuel for actual demand. Scarcity kicks in. Right now, tokenomics are a drag. But once the bulk of those unlocks are behind us, supply pressure eases. That's when price can finally move more freely, and the smaller market cap means a breakout can snowball fast. Put those three together, and the 2030 bull case for HBAR is crystal clear. A run into the $3 to $5 range, with some optimists even eyeing $10 plus if the stars align. That's 15x, 50x potential from today's prices. Not guaranteed, but absolutely on the table. Now let's turn to Stellar. Unlike HBAR, Stellar doesn't need to break out. It already has a resume. It's been here since 2014. It survived every crash, every FUD storm, every crypto is dead headline. And in 2025, it's still sitting in the top 20, still relevant, still building. That alone is a massive achievement in this industry. But the question for Stellar isn't, will it survive? The question is, can it thrive? Here's why the answer could be yes. Payments are forever. Cross-border money transfers are not a niche market. They're a multi-trillion-dollar industry. And Stellar has carved out a reputation as the blockchain designed for exactly that. From remittances to humanitarian aid to CBDC pilots, Stellar keeps showing up where money needs to move. Name recognition. You'd be surprised how much this matters. In a sea of new projects, people cling to the names they recognize. When retail FOMO kicks in during the next bull, Stellar is a brand that will resurface. It may not be flashy, but it's familiar. Gradual growth. Unlike HBAR, Stellar doesn't need a hype explosion to win. Its steady expansion into real-world use cases builds a foundation. Over time, that adds up. By 2030, the realistic bull case for XLM is somewhere between $2 to $5. From today's prices, that's a 5x, 12x return. Not as crazy as BAR's moonshot, but much more reliable. If you want a coin that won't give you sleepless nights wondering if it'll disappear, Stellar is that coin. Let's talk about the human side for a minute. Because even if you pick the right horse, you can still lose by playing the game wrong. With HBAR, the challenge is patience. You might hold it for years while it goes nowhere, wondering why you didn't just dump it and move on. Then one day it rips 5x in a month, and if you sold too early, you missed it. Holding HBAR is about conviction and timing. With XLM, the challenge is boredom. It moves, but not dramatically. You'll be tempted to sell it for something shinier, only to look back in 5 years and realize XLM quietly doubled or tripled while you were chasing memes. Holding XLM is about discipline and respect for consistency. This is why a lot of smart investors don't choose, they hold both. That way, you hedge against your own psychology. If HBAR moonshots, you're covered. If XLM grinds steadily upward, you're covered. And most importantly, you don't get left out of either story. So if you're thinking about the long game, here's how I'd frame it. HBAR is your moonshot bag. It's high risk, high reward. A coin you tuck away knowing it might do nothing for years, but also knowing it has the potential to change your life if it finally breaks. XLM is your anchor. It's the steady, proven project that keeps you grounded. Maybe it won't make you filthy rich, but it'll still be standing when a lot of other coins have faded. In other words, one's a rocket ship waiting for ignition. The other's a ship that's weathered every storm. If we're purely talking ROI potential, the edge goes to HBAR. A smaller market cap, untapped narrative, and delayed breakout cycle make it primed for outsized returns if the market blesses it. But if we're talking survivability and certainty, the crown goes to XLM. It's not going anywhere. It might not 50x, but it'll still be in the conversation in 2030. The real win, playing both sides of the equation. Because in crypto, diversification isn't about buying 50 coins. It's about picking a handful of survivors and moonshotters and riding them through the storm. HBAR and XLM make a natural pairing. By 2030, HBAR could be the breakout star we've all been waiting for. The coin that went from undervalued sleeper to headline-grabbing powerhouse. Or it could stay the eternal hidden gem, loved by diehards but ignored by the mainstream. By 2030, XLM could be a $2 to $5 survivor, proving once again that boring often wins in the long run. Or it could drift sideways, overshadowed by flashier rivals but still here, still relevant, still useful. The point is, both have paths forward. Both deserve a place in a serious investor's portfolio. And both remind us that in crypto, the race isn't always about who's fastest. It's about who's still running when the dust settles. If you've made it this far, here's the move. Don't overcomplicate it. Stack a bag of HBAR for the moonshot, stack a bag of XLM for the reliability, and then forget about them until 2030. Don't get shaken out by the noise. Don't panic sell in the dips. And don't let boredom push you into dumb trades. Crypto rewards patience as much as it rewards risk. Stay focused, stay balanced, and remember, sometimes the best strategy is to let time do the heavy lifting. Because when 2030 rolls around, you'll either be telling yourself, I'm glad I held on, or kicking yourself, I can't believe I let go.